Welcome to today's Daily Market Explainer for August 5th, 2026. I am absolutely thrilled to have you here. Look, if you're trying to cut through all the noise and get to the absolute core of what drove the tape today, you're in exactly the right place. It was a choppy, news-heavy session out there, totally dominated by central bank action, some crazy commodity moves, and massive single-stock volatility. So let's dive right in, shall we?
Here's the rundown for today's rapid-fire session. 1. The macro market headline. 2. The biggest movers and shakers. 3. Market scuttlebutt and rumors. And 4. The outlook and watch list. Let's get to it.
Section 1. The macro market headline. Looking at the broad forces at play. Okay, looking at our top-level indices, we saw the markets close just marginally higher after a really volatile, policy-driven session. The Nifty managed to basically squeeze out a win, closing up a tiny 0.04% at exactly 24,625. The Sensex showed a bit more strength, climbing 0.19% to finish at 78,581. But the Bank Nifty, it definitely felt the pressure today, slipping 0.29% to close at 57,740. Under the hood, the breath was a total mixed bag. Metals and autos were doing the heavy lifting, pulling things up, while media and IT acted as giant anchors dragging us down. It was a real tug of war, and to understand why, we've got to look at today's primary catalyst.
That catalyst was a number, 5.25%. The RBI Monetary Policy Committee decided to hold the repo rate steady right there. More importantly, though, they maintained a quote-unquote neutral stance. Now, for those of us translating central bank speak, a neutral stance is basically the economic equivalent of a giant shrug. It means they're perfectly in line with consensus, keeping their commentary strictly data-dependent, and just leaving the door wide open for future adjustments without committing to anything. This mixed messaging explains exactly why rate-sensitive stocks were all over the map today, with banks easing off while the broader tape held its ground.
Now, another massive macro tailwind we had at our backs today was crude oil. Brent crude actually slipped below that critical $80 a barrel mark, extending its weekly loss to over 12%. To put that into perspective, falling oil is a huge clear-cut positive for India. It instantly eases the pressure on our import bill, cools down inflation, and drastically lowers input costs for companies. Thanks to this softer crude, plus some supportive inflows, the Indian rupee stood remarkably firm near 95.1 to the US dollar. The RBI holding rate steady definitely played a part in keeping the currency locked down post-policy too.
Confirming that supportive environment, foreign institutional investors, the FIIs, stepped up in a big way. They were net buyers to the tune of 2,446 crore. On the flip side, domestic institutional investors were actually net sellers at roughly 936 crore. The major takeaway here? Foreign flow direction has turned highly supportive. When FIIs are pumping in nearly 2,500 crore, it provides a really solid cushion, absorbing domestic profit booking and keeping those indices green.
Moving on to Section 2, the biggest movers and shakers. Let's zoom in to the battleground action.
Let's look at the extremes. On the gainer side, HINDZINC was an absolute monster today, surging 6% to close at $597 on a massive silver and zinc price boom. JUBLFOOD popped 4.3% to $485 on some serious QSR momentum after a strong update. We also saw fresh 52-week highs for Bosch, up 4.2% to 42,920, and PNBHOUSING jumping 3.9% to 1122 after reporting a stellar Q1. Sona Comstar also shined, up 3.5% on EV driveline momentum. But then, on the flip side, KALYANKJIL tumbled 3.7% to 570, getting hammered by gold price volatility. MCX dropped 3% to 25.99, facing heavy profit booking. Other notable losers dragging the market included MARICO, Delivery, and NHPC.
So, to sum up the divergent fortunes of the day, HINDZINC climbs on a silver boom, while MCX suffers a post-earnings hangover with massive short buildups. It really was a tale of two tapes today, right? HINDZINC is riding the crest of a roaring success in the metals sector. Meanwhile, MCX is just getting crushed by a combination of regulatory overhang and some of the heaviest short open interest buildup we saw on the entire board today.
Section 3. Market Scuttlebutt and Rumors. Time for the unverified buzz.
Now, I want to pose this question directly to you. What does the LICI OFS green shoe chatter actually mean for the market float? If you were listening to the dealing room chatter today, you definitely heard this phrase thrown around constantly regarding India's insurance giant. Let's break down exactly what this means for anyone holding the stock.
Okay, so an OFS green shoe is an over-allotment option. In this case, the rumor is that the government might exercise this option to sell an extra 4% of LIC, on top of a base 2.5% offer for sale. Now, while this is completely unconfirmed right now, it perfectly aligns with the government's disinvestment ramps. But for the stock, yeah, it's a negative near-term catalyst. Flooding the market with an extra 4% creates a huge supply overhang, which would definitely be dilutive to the share price in the short run.
Then there's the massive buzz surrounding our top gainer today, the Hindustan Zinc Value Unlock buzz. There is revived chatter that they might finally demerge and list its highly lucrative silver vertical as a completely separate entity. Now, management hasn't filed anything official yet, but hey, the market doesn't wait for official filings. That explosive 6% move today tells you everything you need to know. The street is eagerly pricing in this potential restructuring as a huge re-rating catalyst.
Finally, Section 4, the Outlook and Watch List. Let's build our playbook for tomorrow.
Here is your catalyst timeline for the next 48 hours. Tomorrow, August 6th, we get crucial earnings from BSE, BIOCON, and LIC, so definitely keep that OFS rumor in mind when reading LIC's print. Then on August 7th, we have massive heavyweights reporting: SBI, Titan, and HPCL. State Bank of India and Titan are absolute key F&O prints to watch for aggressive post-result gaps. Also on August 7th, we have a major ex-dividend cluster, including PI Industries at 10 rupees a share and Bayer Crop Science at 35 a share. Remember, tomorrow, August 6th, is your last day to buy in to qualify for those payouts.
For all you active day traders out there, pay very close attention to this options data. Because of the schedule, the Nifty weekly options expiry lands on Tuesday, August 11th. Tuesday. Do not assume Thursday and get caught offside. With the spot sitting right around 24,625, the max pain for Nifty is pegged at 24,550. Your heaviest open interest for support is sitting at the 24,000 put, and resistance is towering at the 25,000 call. For Bank Nifty, looking at the August 25th expiry, max pain sits tight at 57,800. These are the gravitational magnets you need to watch.
Wrapping things up, our prime watch list idea for tomorrow is Hindustan Zinc on the long side. I mean, it showed undeniable metals leadership today. The catalysts are clear: fierce underlying commodity momentum combined with that value unlock demerger chatter we just talked about. But as always, respect the risks. The primary risk here is a sharp reversal in global metal prices or a sudden spike in the US dollar. Keep your stops tight, folks.
If you found this breakdown valuable, make sure to subscribe and smash that bell icon to keep your portfolio climbing faster than Hindustan Zinc and avoid crashing like MCX after a quarterly print. We are here every single day, distilling the noise into actionable insights just for you.
And a quick reminder before we go, this explainer is personal research for educational purposes only. It is absolutely not investment advice. The markets are unforgiving, so always do your own homework before executing a trade. So, as we look to tomorrow's opening bell, with central banks shrugging and commodities shifting wildly, I leave you with this. Are you positioning for the breakout or hedging for the breakdown? Trade smart, and I'll catch you in the next explainer.